Hey guys, welcome back. So it's official, 2023 is now a thing of the past. So happy new year and welcome to 2024. As we all now set our goals and resolutions for the new year, I'm sure increasing our wealth remains a top priority for many. Now, I think last year caught many people by surprise, as the Fed was raising interest rates at the fastest pace in history. And so many thought this was going to cause a big crash, which actually never happened. And as you'll soon see, many of the financial assets had an amazing year. And so in this video, we got some very important topics to cover, including first up, asset class performance. How did everything perform last year? The winners and the losers, and what were the best places to invest? Then we'll cover the most important decision all investors have to make for this coming year. And then finally, we'll finish up with my own personal plan on how I plan on maximizing returns while minimizing the downside in 2024. Okay, so first up, now that the year has finally wrapped up, we get to see how everything has performed. So how did everything do, and what were the best places to invest last year? And so here it is, the asset class performance of 2023, and we're going to be taking a look at the commodities index. This is the Goldman Sachs Commodities Index, a basket of commodities. We've got bonds, BND, which is a total bond market index. We've got cash, we've got property, gold, stocks being the S&P 500, tech stocks being the Nasdaq, the crypto market, and then Bitcoin. So starting with commodities, and commodities actually had a very bad year, falling a negative almost 10%. Not a good place to be. Bonds had a terrible year where at a certain point they were down and had one of the worst performances in hundreds of years before coming back, and this index finished about negative 2%. Then we've got cash, and cash is always zero. And before the people begin shouting out, yes, but what about inflation? If on average inflation was 10%, then this should be negative 10%. But remember that inflation affects every single asset class. So you'd also have to take off 10% from everything else. And this is the difference between the nominal return and the real return. So to keep things like for like, cash is zero, which, as we can see, did beat bonds and commodities. Next, we have property. And property is very difficult because it really depends on location. So do we look at UK? Do we look at the US? If it is the UK, do we do the north of England versus the south? If it's the US, which states do we look at? Because they all had different performance. It could be commercial real estate, which we know had a terrible year, or residential. So to keep things simple, we're just going to put this at the average growth rate, which is at about 5%. Next, we have gold, and gold actually had one of its best years in a long time, growing double digits, 12%. S&P 500 had an amazing year. Remember, on average, the S&P grows at about 10% per year. So 25% last year definitely surprised a lot of people and is an excellent year for the S&P. And all the people investing in index funds. Then splitting out tech stocks and the Nasdaq, and it had a stellar year. Tech stocks, especially the Magnificent Seven, was up 55%. So an incredible year for tech stocks. Then the crypto market as a whole absolutely exploded from its terrible performance in 2022, growing 116%. However, if you just invested in Bitcoin, which is like the index for the crypto market, this went up 156%. Now, obviously, we can select individual altcoins, which did even better, but from a risk-adjusted basis, Bitcoin was the best place to be. And as far as I can see, in 2024, it's probably going to be a similar picture. Now, on to the most important decision all investors have to make for this coming year. And the most important thing is always asset allocation. Where are you going to allocate your money? And what is your portfolio going to look like? And there's 7 core places where you could invest. This would be a mixture of stocks. We have bonds, we have crypto, we have alternatives. So this could be investing in watches, if you know about watches. It could be like old historic cars. I would put things like NFTs actually into here because it's like digital art. And in the normal art world, we can get things like red squares which sell for $10 million, similar to what's going on with NFTs, where pictures of rocks are selling for tens of thousands of dollars. So this requires specialist knowledge. We then have gold, property, and cash. And depending on your age, your risk tolerance, your income levels, your goals, your experiences, as well as many other factors, determines on where are you going to put your money for this coming year. So asset allocation is always the most important thing, and it's something that as the years go by, as you learn more, as you read more, as you study more, as you get experience, as you see what lots of other people are doing with their money, it's something that you'll get better and better at. And by getting lots of different reference points, you begin to see what you should be doing with your own money. But unfortunately, it's different for everyone. So with that being said, let's move on and see what my personal plan is and my personal asset allocation for this coming year. And as you can see, it is fairly simple. As I talked about in some of my final videos from last year, I'm pretty much gone all in the crypto market for this coming year. I say almost as it's 97.8%, so there is a little section of cash as well. Now, a big part of investing is all about protecting the downside. And from the outside in, this looks and would be classed as a very high risk portfolio. However, this cash position is actually 12 months worth of expenses. So on managing the downside, first up, I have a year's worth of expenses in the bank. So that's point 1. Point 2 is that in crypto's history, it's never really completely gone. Yes, it's crashed down 50%, 60%, 70%, but it's never actually disappeared. So the risk of this completely disappearing is very, very low. And even if it ended up being a terrible year and it went down by 50%, I would still be in profit. So again, my personal situation is not as bad as this looks. And also, even if I lost everything, even though I did sell my own property to put it into crypto, as a family, we still have our own house. So losing it all wouldn't actually be losing it all. So although this looks crazy risky from the outside, it's not as bad as it first may seem. And in fact, what makes me feel much better is if we just scrub this out. Let's bring this in. There we go. 98% in digital assets. Much better. And breaking this down more specifically, this is how my crypto portfolio looks like as from the 1st of January, starting with Ethereum. And obviously this coming year, we've got the Ethereum ETFs saga to go through. And I think there'll be a big rotation from Bitcoin to Ethereum this coming year. Once all the craziness of the Bitcoin ETFs is over, people will then be looking at the next one. So I think a big rotation is coming for Ethereum this year. And I think, as in every previous cycle, Ethereum will outperform Bitcoin in 2024. Now, a similar size position is in Coinbase, and obviously with all these ETFs going live, Coinbase has been named as primary custodian for all these companies. So that is going to be a massive revenue generator for Coinbase, as well as everything else they'll be doing in digital assets this coming year. Next, we have Optimism, and this is probably my highest risk bet, but there's a new Ethereum upgrade coming in Q1, which is really gonna boost the layer 2s. So I'm expecting big things from Optimism this coming year. And with a market cap of only around 3 billion, this has tremendous upside, especially when you compare it to something like Solana, which its market cap is now close to 50 billion, or Ethereum, which is a couple of 100 billion. However, I must be prepared that one or more of these may blow up next year, and it's probably Optimism that has the biggest upside potential, but also the highest probability of disappearing as well. Then we have Avalanche, another layer 1, now in the top 10, and then finally, Solana. And since going all in, which was only about 6 weeks ago, between the new ones and the ones that I had, Coinbase has doubled, Optimism has doubled, Avalanche has doubled, and Solana has doubled. So far so good. And this portfolio is designed to do exceptionally well in an up market, but in a down market, it would also get absolutely crushed. Now, the big bet for this next year on why I'm going almost 100% in digital assets has to do with this 4-year cycle. You get these crazy runs, big crashes in the halving, crazy runs, big crashes in the halving, crazy runs, big crashes in the halving, big runs, big crashes in the halving. And the bet is that if history repeats, then this next year it's going to be a crazy run. Or we could look at it another way, and this is the crypto market's performance since 2013. And as you can see, there's a very distinct pattern. After you get these big, massive correction years, there is 1, 2, 3 years of excellent performance, a big crash, and then 3 years of excellent performance, a big crash, then 3 years. So this would suggest that 2024 and also 2025 are going to be great years for crypto, and this is the bet I am making. And these being the halving years. And historically, the halving years are excellent for the crypto market. So as you can see, it's a calculated bet. My plan is also rule-based, as one of the most important things is when do we sell? So after my analysis and based on my personal situation, this is when I'll be looking to sell. First of all, we have a time-based one, and of the 3 prior cycles, 2 of them have topped out 18 months after the halving, which would be this date for the next cycle, and 1 of them topped out 12 months after the halving, which would be this date in this next cycle. So because mine's a very high risk portfolio, I want to be early in, but also early out. So my time-based rule is that I'll be looking to be out by April 2025. So I'm pretty much going to be holding on this entire year. I then have another indicator, which would be Bitcoin at 2 times its previous all-time high. So once Bitcoin gets to around $135,000, this will be another warning sign that I need to be exiting. And I also have a value-based one as well. So if the portfolio were to trigger 1.5 million pounds, which is about $2 million, this would also be a hard out. And I'd literally sell out everything for this cycle. Now, the reason I don't want a dollar cost average is that if I slowly dollar cost average out, then I'm still going to have 20, 30, 40, 50% of my portfolio, which I'm going to have to ride down through the crash for at least a year, maybe 2. I'd rather be completely out, use the money, and then buy back in once we're close to the bottom of the next cycle. So that's just my personal plan. So in summary, for 2024, it's a crypto digital asset focused plan. Because it's very high risk in altcoins, the plan is to be early in, which was all in at the end of last year, and be early out, ideally before April 2025. It's rule-based, so as these rules get triggered, It won't be on emotion, but I'll be selling up based on rules that have already been set. And as you saw, although I have done everything I can to protect the downside, I still have cash. Losing everything, I'd still be okay. So my downside is not as bad as it first may appear. With 2023 now a thing of the past, we all must now look and plan for 2024. As we saw, last year caught many people by surprise. As it turns out, raising interest rates at the fastest pace in history didn't have the impact many thought it would, and lots of financial assets ended up having an amazing year. Turns out that it's probably central bank liquidity that has a bigger impact, which explains the big crash in 2022 and why this year it's likely going to be another great year for risk assets. For me, mine is a calculated bet on risk assets this year, which would be classed as very high risk. But as you saw, my downside is not as bad as it first initially looks. And another important point is, how do we measure success? So if I wasn't invested in crypto, I would probably be invested in the S&P 500, which historically returns about 10%. So although 100%, 200%, 300% gains would be great, I only need to make more than 10% in a year for all of this to have been the right decision. So the benchmark is actually quite low. And finally, remember, this is all based off my personal situation, my age, my risk tolerance, my income levels, etc., etc. So never just copy, as you could lose everything, but just use it as a reference point of many. So there you are, guys. Hope you enjoyed. Now we're starting the year with the Bitcoin ETFs, followed by Ethereum's next big upgrade, 4844, followed by the halving. So I have to admit, right now I am feeling very bullish. And any thoughts or comments, then let me know below. However, just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.